Good evening, everyone, and welcome to the Locke in Your Success Trade and Market Update for February 16th, 2013. Before we get going, just a reminder that this video is for educational purposes only. I am not a financial advisor, nor am I a broker-dealer, and I do not make investment recommendations. Trading options is very risky, so please be aware of all your risks prior to placing any trades, and review the characteristics and risks of standardized options documentation available at my website, lockeinyoursuccess.com, and at your broker. And be sure to visit our trading blog and find out about our great coaching and mentoring programs, as well as many other things. The markets were pretty flat this week if we're talking about the SPX, the Dow, or the NASDAQ. However, the Russell has continued its trek upwards, and it had a very, very strong week. In fact, if we take a look at the weekly chart, this is one of the strongest weeks we've had since mid-January. So very, very bullish week in the Russell this week. If we look back at some of the other indices, we find that the SPX was relatively flat. The Dow was actually down for the week, and the NASDAQ was actually pretty flat for the week. So very, very flat week with the exception of the Russell. And the small caps continue to outperform everything else and continue their irrational climb higher. What can we say about this other than I believe that the Russell is acting irrational and it's due for a retracement. I still think that we will be coming down, and I believe that what's going to happen if this follows the regular pattern as we get these large up moves, fairly large down moves to major support, what I believe is going to happen is we're going to top out anywhere in this range here, and we're going to end up coming something to this type of an angle. And I do have a marker down here at this trend line. I don't really think we're going that low. I think we're probably coming into this 870 area. Although we are overdue for a 200-day moving average touch. You'll notice the Russell recently, about every 4 to 5 months, it's been touching its 200-day moving average. We are, let's see, since we've last hit our 200-day, we're 3 months, which puts us, sometime around here hitting our 200-day, which would bring us down in the 840 range. I don't know. That's a big run down for me. I don't know if that's going to happen, but I wouldn't be surprised to see us hit. You're at least going to hit your 50 very shortly, which would bring us down probably by the time it hits it up into this range here, 885. And I believe we are going to cross the 50-day again and come down to this more major support level here at around 870. It's just we have to wait till something shakes the market a little bit, and down she will come. Now, with the other indices like the SPX, again, we're still overextended. We are due for this thing to come down to support also, which is in the 1475, 1470 range. And it looks like we're trying to top out. If this comes out early in the week, there's good news, it breaks higher. All bets are off for the short term, but it does look like it wants to roll over here at this trend line. And there's a good possibility we'll be coming down and making some sort of a touch here. If we take a look at our Dow, we've already come in contact with the 20-day moving average. This was really, really strong earlier, and it just kind of completely flatlined out. We had a 20-day moving average touch. That means this is kind of consolidated and maybe due higher. I was thinking that this might make a run for 14.2. The fact that it hasn't, and the Russell's still continuing to climb, to me is a bit of a sign of weakness here. But we shall see. I still have a hard time believing we're not going to make a run for this 14.2 at some point. However, it almost looks like we're going to reset first and come down into here and then make the run for it at this point. And the NASDAQ has also been flat sideways. This thing's been flat forever. I mean, we had a little bit of a bounce up here, and it's been in a really, really tight range to our income for options or market neutral strategies. This has been excellent for the last, 3 or 4 months. So really nice index to be in if you're sideways. How long is it going to stay there? Who knows? If everything else resets, this is going to reset back down here at 2700. If, again, we're watching for this to break out. If this breaks out, it's going to be bullish for the markets. And the same thing goes with the Dow. If this decides it breaks higher than then this high here up here at around 14,040, then that's definitely going to be bullish for the market. It's going to pull the Russell higher. And on the SPX, if this breaks up higher, then that's going to pull the Russell higher also. However, I think it's more likely we roll over here, everything resets, and then where we go from there, we shall see. But it's time to reset. All right, so that's what our outlook is for the markets to either run sideways or down for the week. Okay, let's take a look at our positions. What I'd like to do is go back in time to Thursday. Thursday is the last day we could have traded the February positions. I did end up expiring pretty much every February position I had. Markets were just, like I said, the Russell just continued to go up, continued to go up, continued to go up. Really, really difficult month this month. The February M3 trade, once again, with this continued grind, it does not like this. Usually you can hold your own, and you should be able to more or less not lose money under these conditions. Last month, I let myself go a little bit bearish in my, and that would be the January expiration. I let myself go a little bit bearish, in my opinion, and I let this get down a little bit of money, and I never recovered it because the market never actually did back off. However, February I traded a little bit more neutral, and I took a $419 gain. I did expire this. This is what the graph looked like coming into expiration. No danger on the upside, obviously. We would need a horrendous gap to the downside for me to have any problem. So I was perfectly comfortable in this position. And of course, we didn't get much of a gap at all. So we ended up expiring this at the expiration line, which is $419. And that was that trade. So that was actually the weakest trade for the month. It was about a 0.8% gain. Let's take a look at the bearish butterfly. And I'll show you what I did there coming into expiration. Here's the position as of Thursday afternoon. Oh, I'm sorry, I actually took this position off. I'll show you it before it comes off. And I did it on Thursday, about 12:16. All right, so what we had is the market was just continuing to climb throughout the day. This is what our position looked like. I had been coming in here and taking off all these 890 butterflies. If you look earlier in the week on Monday, we'll take a look at what this position looked like. You can see I had some 890 butterflies here. I had my 910s and I had my 930s. And the market was kind of behaving. It's just kind of creeping up. As it did, we started pulling these 890 butterflies off. And we did some on the 12th, some on the 13th, and on the 14th we just decided to close the trade right out because it kept right on going. So if we take a look at this here on the day before we closed it out, this is what we looked like on the day we closed it out. I was basically hoping for the market to be relatively flat and not move around for Thursday. And as you know, we got a very decent sized up move on Thursday, so there was no point in chasing the thing anymore. So by noontime, I was sick of chasing it, and you can see we're starting to put on a little bit of negative delta here. And I was getting concerned the market was going to make a run, and I wasn't going to expire it here because we're too close to our short strikes to expire this month. So I decided just to take the darn thing off and not worry about it. So here is the position before it goes, and when it, by the time I got it off, we were up $6,248 is what the closing price ended up being. So I got some good fills getting out of here, and that was made for a return of about 12.5% on our planned capital. So bearish butterfly, it drew down some this month for sure. Ended up being a good trade. You notice in January, that trade by guidelines would have won. I took a very small loss because I did not trade it by guidelines. I didn't want to. I was concerned with the market coming down, and so I decided to just kind of bounce out of the trade when we got a bit of a retracement one day. Yeah, had I held in there, I would have been done a little bit better last month. But this month here, 12.5% in a market that's on a bearish butterfly, in a market that just continues to climb almost every single day. Pretty much since we put this thing on. right? This has been through, this here. We put it on like right around here. Had a couple of days when we first put it on, it was fine. Then this huge up move and just continued to go up, 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 and not stop. So to do 12.5 on a bearish butterfly like that is fantastic, and I'm really liking that. If we scoot over to the rock trade, this one here, this is what it looked like on Friday. If we take a look at our analyze graph, let me back it up a little bit. That was after I made my adjustments. Let's see what time here. I made my adjustments at 11:30. Okay, so let's go ahead in here before 11 o'clock, and I'll show you what I did. All right, so here is the rock trade at 11 o'clock. Let me back this out a little bit. Situation is the market is creeping up on us. It continues to go, right? I have a very tight range. I don't know how high the market's going. So again, if the market took off on me, I had no time to recover. I was up a decent amount of money. No ways near my profit target, but I'm fine with that to take what I took with the way the market's been going. So what I do is I want to take my risk off the table. Instead of taking the risk of trading out of everything and taking all this execution risk, what I did is I came in here and sold 8 of these 870 calls. I bought back 20 of my short 920 calls. I bought 5 of my February 880 puts, and what that did is it puts me into a position that looks like this. So from here, doing those few short moves, I take all my risk off the table. I don't have the execution risk of trying to get out of everything. Very, very safe position. I would have to have a gap down of all the way under 850 to really hurt me very much. If I was concerned about that at all, I could have bought back the rest of these puts and had this graph just continue to climb here. But I still had a scenario if we had a major market move either direction, I would have made more money, and all the risk is off the table. And I let it expire this way, and it closed out for basically what's on the expiration line here. So that was the February rock trade. It ended up with a profit of $6,048, or 12.1% of our planned capital, and that was a nice trade also. Let's take a look at our V trade, and I'm going to go to the beginning of the day on Thursday. Actually, I have to go all the way back to Tuesday, I believe. So here's what we got on Tuesday. This trade has been doing very nicely the whole time, and of course, if the market continues to rise, it's going to continue to make more money. I am getting a bit directional here because if the market sells off, I'm going to lose money. So I am starting to get a little bit concerned. We are more or less at our profit target here. So I'm going to come in here, and I don't believe I did it this day. I actually waited till the 13th towards the end of the day. So we come in here to the end of the day on the 13th, and we had another up move this day. We'll take a look at that. And here we are. We're right on our expiration line. And at this point, I'm satisfied with my profit. I may not want to trade out of everything because I have options that you might experience some slippage on commission costs and everything else. So I want to do something similar to what I did with the other one. I want to just take this thing and lock it down so that I can't lose any more money and let it go. So what we did here, if you come to the end of the day, I basically bought back my 15 shorts. They're only 5 cents. I sold off my call of my straddle, and that puts me in a position that looks like this. And I have no trouble to the downside with the overnight gap unless I get under 820, which I'm completely not concerned about. And the chances of me getting to 972 are pretty much about the same as me getting to 820, nearly implausible. So we came in and we just let this expire here on this expiration line for a 53.06 profit, or 10.6% on our planned capital. And those were all the trades that were expired last week. Now let's take a look at our March trades. We'll take a look at the March Bearish Butterfly. Okay, here's this position. As of Thursday, we were 2/3 entered, and we're down about $1,600. And this is what it looked like. I don't believe I did anything to this this week except for add this last butterfly in on Wednesday. So we added the 920 butterflies on Thursday when the market exceeded 920 according to our plan. That gave us a graph that looks like this. And of course we had a continued up move, so it actually drew us down a little bit of extra money. If we come to Friday, this is what we look like here. We're about at break even, pushing our maximum delta, very, very close to maximum delta. I imagine it may have exceeded it once or twice intraday. It didn't actually exceed it when I had it. If that were the case, you have the option of pulling this 900s off. I don't know that I'd really want to do that in this case. Like I said, I'm pretty confident the market's topped out. So, that being the case, I might avoid pulling this off because if this just pulls back a little bit here, this is going to be in real nice shape for the month. We have basically till Friday, if not $5,000, which is very conceivable. If we get just a reasonable pull down, then we can close this. We're out for the month, and it's another quick 10% gain. March never really gave us any trouble thus far. I don't think it's going to outrun us either, even with the market kind of resetting. Chances of going high enough to outrun it are slim. It's possible, but I doubt it. So this should be a good month. If the market does happen to hang here and push a little bit higher, then that puts us in a really nice position for April. If it comes down, April's not as good of a trade, but I still like it because it's on the longer term charts we're even overextended with the Russell, so that basically means that April's probably going to be a good trade unless we get a really hard down move before we get in. So here's where we stand in March. Everything is going fine. Very, very good probability trade. I really, really like it this month. And let's take a look at our. I also entered two positions. I entered the March M3 trade. This is what this looks like here. I put it on and we bought 890 butterflies, and I decided to buy 5 890 910 verticals and 5 890 920 verticals and 2 calls. I did it in the morning when the market was up, which ended up being a little bit aggressive. I wasn't going to go quite this aggressive, but I said, you know what, how bullish things are, and the way that the March bearish butterfly is sitting in such a bearish stance, I wanted to push this a little bit flatter delta than normal. So I went ahead and did that. We are a little bit vulnerable on the downside. If we start having any kind of a hard down move here, we're going to have to do some fancy footwork to get out of this. But the price on our verticals really came up when the market pressure changed, so that's why we're down money. We're off our theoretical range. If the option price is normalized, we should be fine. If they continue to be off, then we'll be down a little bit of money if we get a pullback. But this is good as long as the market holds up. If the market doesn't hold up, we're going to have to do some fancy footwork here. But that is the entry for the March M3. I don't expect it to be a long trade. We entered very late, 29 days to expiration, in an extreme low volatility environment. I'm not going to play with this long. I get $2,500. It's probably gone, and we just move into April. All right, and we'll take the rock trade for March was also entered. This trade here is down a little bit of money also. I came in, I entered 910 butterflies, and entered 950 butterflies to straighten our delta out. Of course, I did this in the morning also. The market came down, volatility came up, so we're down a little bit of money. No big deal. This looks really nice. The market stays up, it'll be really nice. The market comes down, then we'll be fighting it to the downside. But like I said, bearish butterflies cover me to the downside really well in March right now. Allows me to go a little more aggressive with my rock trade and with my M3 trade. If I'm wrong and it comes down, a lot of those losses should be picked up by the bearish butterfly. If it continues to go up, my bearish stance with the bearish butterfly will be somewhat compensated by, these will do pretty well. So I think our overall positioning from March is pretty good. Also entered a V Condor for March, which is right here. This is down a little bit of money also. Here's what the entry looks like for March. Let me back this out a little bit. Now, unlike the other trades, which I do like this month, I am not overly crazy about this one. Fine if the market keeps going. I think it's topped out. market comes down hard, this trade is not good for that, right? It doesn't like a hard down move. It's going to be a rough month. The market kind of hangs here for a while. It creeps down, it'll be good. If the market hangs here and does nothing, this straddling here really does hurt the theta characteristics of a regular condor, so we won't do well in that situation. Still have plenty of time for this, but actually this is the April V condor, so still have plenty of time for this to work out all the way into April. It'll probably do fine. The trade doesn't usually lose unless you have a severe down move. But we'll see how it goes. So this looks like I like it, but I'm not as thrilled about it as I am with some of the other trades. All right, those are our positions. I will keep you updated with any changes. Hope everybody had a great President's Day weekend, and we'll talk to you soon. Good night.